Good morning. I gotta turn on my do not disturb. Do not disturb. Bum, bum, bum. Okay, I got the daily stock picks there. Close down Facebook. Savvy Trader. I'm on the front page of Savvy Trader, I found. They emailed me. Let me pull up so I can see YouTube. There we go. Morning, Joe. Morning, Nevin. Hit the thumbs up button. I got to put on live chat on here. Live chat. If you haven't signed up, this Savvy Trader, I need to text some folks because they've been, I think it was a few years ago somebody told me about Savvy Trader. Maybe it was a year ago or so, but it's a great way to track if you're doing trades and you don't want to pay for something and blah, blah, blah. I like Savvy Trader, but this trading portfolio, morning Hogan, right here, I've got cash. I'm still 50% cash in it. I kind of put $50,000 in. I figure I'm going to use $50,000. But I bought Ulta. I bought Netflix. I bought, thought I bought more Netflix than that. I did buy no more Netflix than that. It says I only bought one share, but oh well. A lot of these say I only bought one share. I guess I'm screwing it up, but I bought a lot more than that. But you can see I'm up a good amount in all of these. But I've got that big trophy. Morning, Mo. I don't know what you call it. I had a fun interaction with a douche yesterday on YouTube. Let me turn this down. Guy said, it's horrible advice to tell people to buy TQQQ and Apple. Horrible. It's overvalued. That's the guy who's telling you, bonds are doing pretty well. 10 years ago, you want to really buy into bonds because it's a safe bet. Yeah, Apple, it's too overvalued. Tesla, you really don't want Tesla. It's not very good. Let me see. We're going to close that. I'm going to look at TQQQ, which your boy told you to buy under 40. It's at $40.16 now. It closed at $39.90. I'm up on it, but not by much. I mean, again, 1% gain in a flat market yesterday. Hey, I'm up by 1% in a flat market. I'll take it. Here, I'm going to go to fixed income on Fidelity. You can see bond rates are rising, which isn't, they're inverting even more. U.S. Treasuries, 2 years at 4.93, 10 years at 3.99. That's almost a full percentage point, which is getting even bigger, which isn't great for the markets, but tomorrow we get CPI data. Let me put that in my notes, because I know I'm going to forget to say a lot of this stuff. Tomorrow, CPI data. I won't do a podcast, but I will have the newsletter. I'm not going to do a podcast because I got to take the morning off. And this was interesting yesterday, by the way, I thought. The Qs, you can see it lost confirmation yesterday. Lost confirmation from a 4-hour standpoint. If we go to a weekly, you're still well above the 9-day. So you still have confirmation. Everything's moving positive still. Got a little bit of green yesterday. I think it was 0.11. Energy, I still think is, they were touting yesterday on CNBC. Larry! They were touting energy as probably the next play. So, and if like Joe and I, you have loaded up on PXD under 200, you got your, let's see. Let's go to Seeking Alpha. I'm going to close that. I got my Savvy Trader, Seeking Alpha, PXD. Let's see, what'd they pay out? Oh, come on. I don't want to put in PSD. Where's my dividends? Yep, I got that in my notes. Special rebalance. I think it's July 24th. Yep. The Great 7. I call it the Great 8, but currently makes up 55% of the NASDAQ. The weighted change will reduce it to below 50%. So all of those ETFs need to rotate. It will be a lift for the other 93 stocks. Remember, it's NASDAQ 100, so. But here, dividends. PXD. Dividend history. So, Joe and I have been buying PXD since, I think I've held mine for almost a year now. Maybe 6 months. But this year I have gotten, let's see, say that's $6. Say that's $3. $9 in dividends. $9 in dividends on a $200 stock through the first half of the year. 5%. I mean, I'm pretty happy with that. But if you got it under 200, it's now trading at 206. So not only have you gotten the 5% dividends, you've made about 3%. So hasn't been a bad, horrible. Let's go to FinViz and look at FinViz. And I'm going to push this over here because I don't even know if I'm going to bring that up. That's Amazon Prime Day. I'm going to move FinViz over to here. Bum, bum, bum. Let's see, PXD. Year to date, down 6%. So you've lost your dividend, but if you're buying under 200, you ain't doing that poorly. So, yeah, average price target still 251. Let's see. Natural gas is going up again. Now let's do some scans because I don't want to be here until freaking 11 o'clock again. Market scanner. And I got to play with the new tool. PayPal. Scans. PayPal. Etsy. CRM. Those are my brokerage holdings that crossed up. Core Investments. Goldman Sachs. Before earnings season starts, Goldman Sachs has a cross up at 316. Ho, 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 ho. Energy, did energy? Arch. We're not going to go over Arch again. Levered ETFs. UMDD. HIB-L. This is 3 times long. HIB-S is the one I invested in before. I will say it. HIBL, URTY, and TARC. TARC is the 1.5 levered. Is it 1.5? No, 2 times levered. Bull of the ARK fund. So you'll get double leverage on that one. Let's target at 131. Just kind of lost its way on that ascending wedge. I do think that that yellow line at 130 is kind of your point. So levered ETFs, low cost Vanguard. We're gonna put these. VO, RSP, VBK, VWO, VOT, VB. Not going to go over all those. Spider sectors. You know, the one that I want to look at is, well, I'll look at energy in a little bit. Let's look at my not owned segment. I think there's going to be, yeah. ARC G, ARC F, ARC W, and ARC K. They all crossed up. SOL, no. Cognex. Tractor Supply is just win. This one might be going on a run. You know what? I'll bring it up. I like it. Win. Match group. Across the 200-day. 3D printing company. Goldman Sachs, that's one. Lowe's crossed up. That one's just been on a run. Social media ETF. SOXL. Is the social media ETF. PayPal, Rocket Mortgage. I've been saying this one. I think I brought this one up before. This one has been. I think I brought it up when it kind of crossed up here, I believe. Crossed down and it crossed up again. This one might be going back to that $10 range. Okay. Not owned. Let's go to the Cathie Woods. ARC Holdings all. See if anything crosses. Cloudflare. Beam. Matterport. God, that software is really good. Novavax. Intuit crossed up. Cat cross up. I'll bring that one up. It's going to come up in the Dow and stuff like that, but boy, there's a lot of cross ups there. Okay, let's go to the Dow. Dow. Cat's going to come up. CRM, Goldman Sachs, we got those. Let's go to the NASDAQ. PCAR. Starbucks. Starbucks under 100. That's one. I gotta believe that that one's gonna come back. Booking.com. SMCI. This one has been in a run. Comcast. Intuit, Texas Instruments, Global Foundries. Marvell got another one. God, that one's just kind of. Notice how it kind of is putting in that between 57 and 60. PayPal, did I bring this up? Oh, let me X. I did do a PayPal in there. O'Reilly. O'Reilly. Auto Parts, Cadence Design, Autodesk. Wow, that looks like there's a gap there. Auto Parts, man. What's this one been doing? Just getting back to the 200-day. Boy, they're all sinking up in that Bollinger Bands is. Boy, that's interesting. But look at the seasonality of this. For 21 years, July has not been good to this stock. Let's go to the S&P. I think that's 100. It's going to be some of the same. Goldman Sachs, PayPal, Lowe's, BlackRock got a cross up for I think it was Brian asked me about BlackRock. I'm going to go back and look at this one. This is an ETF this is the ETF that I brought up that beat Cathie Wood's. And it's kind of hovering around 30. It kind of went over 30. Nope, it's using $30 as a resistance. While the MACD is going down, the RSI is going down. Yeah, Christian, Marvell. I don't know that it's going to cover that gap. Because the earnings were that good. The guidance was that good about AI and chip sector and stuff. So I'm not sure if it covers the gap all the way down. It's covered it slightly. So until you see a breakout above, I'd say 63, I don't think you have a lot of room upside. I think you have more room downside. My guess is you get down to about probably 58, maybe 56. But that gap down, I mean that's just an earnings gap. Go to the daily and you've got a gap there too. See how it's kind of performing the same. Now on the weekly, we don't have a gap. So the 50-day does need to cross on the weekly, but it's not. It's just kind of hanging out around 60. I don't know that you get back up here to the 80s anytime soon, but shit, if they have another quarter like they did last time, where they announce, hey, our demand is at all-time high, where our inventories are low, blah, 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 that's still a good one. Did it pass its ex-dividend date? Yeah, it did. It just had it the other day. But it's a small dividend. I don't think it's huge. Okay. Let's look at SPY. Where did SPY wind up? By the way, bum, bum. The bulls are kind of in control. I mean, it's really interesting how in control the bulls are. I should push that down a little bit so you can hear me. I should move it out of the way, but I don't know. We'll do it like this. Bum, bum. Big head. Oh, I got to do Active Trader Pro. Okay. And then big head. Interesting. Let's go back here and we can look at SPY. SPY, unlike the Qs, SPY, I guess it did, like the Qs, lose its confirmation a little bit. But we look at the weekly and you're probably still well above. Yeah. I mean, you're still overbought on the weekly. But okay. Let me see. Paul Gugger. Hey, Paul Gugger, you're a dick. He said yesterday. He just read the title, by the way. He did not watch the video, but this is the worst advice I've ever seen. This market is going to crash. Apple is way overvalued. QQQ is way overvalued. Dude, advice is in the stock market. Don't listen to a douche on the internet. So if you think it's going to crash, sell everything. Get the F out. I mean, you know, I'd rather have the chance to make some money either on the downside or the upside. But you're just a dick. Let this be a life lesson. Anybody that listens to me. Don't be a dick. If somebody gives you, you know, if you're passing by a video, don't make a comment like, you know, it's the stock market. My response back to him was, let's see, I'll show you my response. I thought I was rather calm for how much of a dick he was. Let's see. I'm up 1% today, so maybe you're right and maybe I'm right. This isn't a dick measuring contest, so maybe don't take the advice and move along. Your choice, keyboard warrior. What a dick. Asshole. Oh, am I going to get flagged for bad content now? For my language with the kiddies? SPY looks pretty good. Okay, let me organize my notes in some form and fashion. I am not going to go over all of this. Okay. Look at XLE. Look at Savvy Trader's profile. Riot was up 8.9%. Where's Mara? Let's look at Mara. Morning, Eric. God, Mara is still confirming. It is down 1% to 1668. Interesting. Mara doesn't do great on the 4-hour algorithm. The 65-minute Mara does really, really well. And Mara got you in at 1583. The performance of Mara on the 65-minute algo is over 8 months, 163%. Whereas if you just bought and held, you'd make 58%. So the you can see all the entries and exits here. So let me pull up my link tree. So I have that one visible. Okay. Let's see. Boom, boom. Oh, stop. I don't want you. Okay. Look at SPY. I'm going to fly through this one today. Listen, the reality of this is I'm in TQQQ. I'm in, let's see, let's look at the Palantir, the Savvy Trader profile. I'm in AMD. I'm in PayPal. I'm in Sedge. I'm in TQQQ. I'm in Palantir. I'm in Netflix. I'm in Ulta. Those are the ones that I'm currently trading, that I currently hold, I should say, that are trades for me. They're identified with specific reasons why I bought them. And in fact, you can read here. If you join Savvy Trader, I'll put this in the chat. It's free to join. It's cool. Add your own portfolio. But it's a good journaling. I mean, you know, journal. Want to talk about journaling? Journal here. This is your trade journal. I bought Hibbs. Got out with a gain. Bought PayPal, still in it. Bought Ulta. Sold my Hibbs. Sold my TSLQ. Got out with a nice 0.43% gain. Not crazy, but avoided a huge loss. Got out with a nice gain. TQQQ. And my Netflix I bought based on the TrendSpider strategy of buying 15 days before earnings. So I'll put this, you know, and what Savvy Trader does, it's great. It analyzes your portfolio. I really, really like this. I will, you know, listen, you want a journal? This is your journal, and it's online and it's nice and easy. It just takes you doing it. So, but I like it. I like it a lot. Let's do some charting. We're going to select symbols. XLE, XOM, Devon. We'll put all those in. I think those are the ones that I have. I have MPLX too. Devon has been the worst over 1 month. Morning, Sherry. Okay. I'm going to start this mofo. Where's my podcast? There is. And my OBS. Morning, Mark. Okay, let's get this shit show started. Hit the thumbs up button, by the way. If you're not subscribed, subscribe. It does help me. I'm monetized everywhere except for YouTube. I think. Well, I did monetize on YouTube, but I got to figure it out. I don't know how to play ads. I don't know how to do anything. So, by the way, there are going to be, I just did this the other night, T-shirts available, or tchotchkes. I'm going to start a tchotchke line. YouTube basically makes it so easy to integrate everything. So there will be Garyisms, like don't trust a douche on the internet. I have somebody taking notes for me on Garyisms. So I'm not going to put my face on it, so you don't have to worry about that. It'll just be kind of nice looking T-shirts that are designed with little sayings and things. I always, there's two tattoos that I always wanted. And one is just on my hand to say listen, because I don't feel like I listen enough. I probably talk way too much, which is probably a good thing for this kind of line of work. But I do talk too much. I don't listen enough, and I need to listen. So that's the first tattoo I always thought of. The second tattoo is from Tim McGraw, I think, sings it. And it's be the kind of friend that a friend would like to have. Be the kind of friend a friend would like to have. I think that's it. But I don't know the exact wording. But it was always kind of, stuck in my head. And maybe those are Garyisms, but who knows. But I'll put them on a T-shirt instead of you getting a tattoo. Okay, let's start this puppy. Good morning. It's Amazon Prime Day, Tuesday, July 11th. If you're buying stuff on Amazon, let's start that off with looking at Amazon. I said in the paid newsletter this weekend, anything under 130, I think you're fine. I mean, the RSI right now is at 39. I will talk about the rebalancing of the NASDAQ, which does have an impact on Amazon. But I think you're fine. Long term, I think you're fine. I mean, again, if you want to look at it from a 4-hour standpoint, you're still in this 106 buy right here. It's got the button hook. It's turning over. It's hitting the 50-day. I don't think that you come back down here to 106, which is that gap. I think you probably will use somewhere in the neighborhood of, if we pull this volume lever back to there, I think you possibly could get to 117, but I think you're building that volume shelf right now pretty well between 124 and 127. So I don't think you'd do yourself any harm by actually buying Amazon, because look at the long term. You're just using the 200-day as kind of resistance. The 200-day is right at 133, 130, somewhere in that neighborhood. Your 50-day is starting to turn positive. Your 9 and your 21 are positive. So your Bollinger Bands are wide open. You're up at the top of them. At some point, it just takes a break, and I think you might be at that break. But at 130, you're going back up to the 170, 180 mark, because good companies with good management, with good products and good profit actually do return to their highs. And Amazon has a cost problem, not a demand problem. So I think that's a good one to start the day with. Today's going to be kind of muted. I just don't see a huge breakout. Tomorrow is CPI day, so you get the June inflation numbers. I will not be doing a podcast tomorrow. I'm traveling to DC, so I'll do a newsletter. So make sure that you sign up for the daily newsletter. It's dailystockpick.substack.com. It is completely free. The paid version is just education on the weekends. Once a week, I post a post that should educate you on trading, some things that I did during the week in journaling, and making sure that you guys know, hey, I make mistakes as well. Everybody does. So it's more about education. If you're up to it, it's $7 a month, I think now, $70 for the year. Choose whichever one you want. It's optional. There is nothing spectacular about it, but if you're here to learn and you're here to learn a system, I think it's well worth the a Happy Meal. It's about what a Happy Meal costs, I think, these days, depending on what location you are. But I will be doing a newsletter tomorrow instead of the podcast. So But back Thursday, I'll be doing one from the hotel in Washington, D.C. Yesterday, almost every stock in the NASDAQ 100 was up. Almost every one. If we look at the Qs, it was pretty much 93 out of the 100 were up. The vast majority were up. The 7, and they're calling them the Magnificent 7. I have my grade 8 because I include Netflix. Netflix is just crazy not to include in this. Netflix is up year to date. Let me look at Netflix year to date because I think it's crazy that people aren't including this one. Year to date, Netflix is up 49%. 1 year, it's up 133%. I bought Netflix yesterday. I bought Netflix at about, I think, 400, just under 440, I think. At 439.50, I think it was. You can see the algorithm has a buy-in here at 441.59. The reason why I bought it was because TrendSpider ran a strategy that says if you buy 15 days before earnings, just buy 15 days before earnings, and then sell the day after earnings, you make 1,371% over the last 10 years in Netflix. So I don't think it's a bad bet. I mean, the worst case, I hold a good company with good earnings, with good management, and good profits at worst. So I figured, you know what? Why not try the strategy? It's back tested. It's proven. Even on the 4-hour strategy, it had a buy-in here at 441.59. I bought in at 439, just under 440. I don't think it's a bad bet. But going back to yesterday's NASDAQ, all of the 7, Apple, Microsoft, Google, Amazon, Tesla, NVIDIA, Meta, they were down, except for Meta, which has just been on a historic run. It's going over 300. If you want to buy it under 300, get it under 300. I don't know if you'll have another chance to get it at a significantly lower price, but they're killing it with Threads. Depending on who you talk to, they haven't monetized Threads yet, but depending on who you talk to or who you listen to, Threads could pose a $2 to $3 billion a year product with advertising. If that's the case, it was developed by 20 people. Imagine what Facebook is going to do if that's the case. So Meta, great one. But the 7 declined yesterday. It was announced that the NASDAQ 100 will be doing a special rebalancing to reduce the weightings of these 7. It will happen on July 24th. Currently, those 7, just those 7, doesn't include Netflix. They make up 55% of the NASDAQ 100. The weightage change will reduce it to just below 50. It means that all of those ETFs, your QQQ, anything that has the NASDAQ 100, they need to basically reduce their weight, and they'll need to sell these 7 stocks. So it could mean that from now until July 24th, you start to see a little bit of pressure on Microsoft, which announced some layoffs yesterday. You can see the algorithm got you out. Let's just go over the grade 8. I mean, I put them in the newsletter, but already that stuff is dated. Apple, you've lost your confirmation. You're not out as far as the algorithm goes. I'd probably, if you're trading this one, I would probably take some profits here. I will be doing some trimming. And when I say trimming, I'm going to be selling shares that have an average sale price, average purchase price of around $2 to $3. So when I say trimming, I'm making hey, I'm going to take a lot of profit on these. I'm going to make sure by the end of the year that I don't pay capital gains because I will be low income, but that's a tax strategy. But Apple, I think you're getting that button hook. I think you're going to probably come back to the high 170s, maybe low 180s. I think that's the best guess is where you pull back to at some point in time between now and September. That's my best guess at this one. I just can't see it continuing up. The iPhone 15 is coming out. The announcement typically is met with a lot of run up to it And then a lot of disappointment once they announced that, hey, we haven't really done anything. So I think that one you can probably get rid of. Like I said, Amazon, I think 127, I think you're perfectly fine getting it. Google, we buy GOOG because GOGL has the voting rights, but it means nothing because Sergey and Larry have so many shares. This one got you out with a 2% loss. I say anything under 120, I think you're fine in Google. Meta, we talked about. This one's up even in pre-market right now. Look at that run. I mean, it just created this gap. It's not coming back down to this gap. You're going to be lucky to get this under 300. I hold it in ETFs. I don't hold it outright. I probably should, but it's just been a juggernaut. Year of efficiency, when their earnings come up on July 26th, you're going to see them just blow things out of the water. Microsoft, the algorithm got you out, like we said. Just probably coming back to 320 level, I would guess, if it breaks down off of this volume gap. If it breaks 330, $330 right now in pre-market, it's at 332. I think if it breaks that 330 mark and holds for a significant amount of time, you're just creating a support level right there. Talked about Netflix, it's at 440.24. I bought it yesterday at 439 and change. NVIDIA, I don't know that you're getting back down here to these levels. This was a support level. This was the low of that day that it created that gap. You kind of used it as support, and then you just catapulted higher. I think you're capitulating. I think you're putting in support here at 420. I think anything under 420, I think you can pull the ripcord on that one and buy it. And then Tesla. Tesla, I mean, it's turning around. It's probably going to come back down to this gap. Their earnings are coming up on July 19th. Who knows what to expect? They're essentially this jump up here was from deliveries on July 3rd. It was when they announced deliveries, really good deliveries. Is that going to kill the margins? I mean, you're hearing a lot about, car inventory going up. So did these guys just, blow it out of the water on deliveries to give up margin? Who knows? But there's your stocks. I mean, those are the big ones. That's it. So let's look at, let me make sure I went over them. Apple, Microsoft, Google, Amazon, Tesla, NVIDIA, Meta. Yep, all 7. And we looked at Netflix. XLE. There is a lot of talk with OPEC and Russia cutting output. Our oil price is going up. This one's been hovering around here. You can see 79.80 was the buy-in. This was on July 29th. You're at 81. You have confirmation. It's still going fine. The RSI is at 56. It's in no man's land. I tend to think that you're probably fine. There are a couple of stocks that I buy. Pioneer Natural Resources, I buy under 200. It has a nice 11% dividend. I did the math earlier. We've gotten 5% dividend through the first part of the year. So I think you're good on that one. Here is Pioneer, and we'll look at the year-to-date. Pioneer is down 3% year-to-date, but I've been adding in under 200. So I'm probably not down 3%. XLE down 3%. XOM, which is Exxon, is down 1%. The big loser has been Devon. And I think Devon under 50 is a good buy. It should start to rise again. But Devon isn't tied to oil prices the way that Pioneer and Exxon are. So in my mind, there's a couple of plays here. I wrote them down. And we can look at one of the other things that I wanted to show you was OIH. This one went nuts a little bit. Just on June 28th, a buy here at 278. You're at 310. This is the Van Eck Oil Services ETF. So all of a sudden, oil has gotten some love. This RSI is at 76. It's overbought. I don't know that I'd necessarily get into this one, but there are others in our energy space that are that have they're below the 200-day. Look at Exxon. Look at COP. COP right on there. Just had to cross up the other day. You can see Devon well under the 200-day. If we look at a long-term on Devon, it's still positive from a long-term perspective. You're over the 200-day, and you haven't been over the 200-day in energy in a long time. So Devon probably still has some downside to go if energy continues to decline. Occidental Petroleum, you're under your 200-day. If you think Warren Buffett has made a mistake and it isn't buying the right thing, I mean, he's been buying this all the way down. I tend to believe in him. Chevron, CVX, this is under the 200-day. You're out as far as the algorithm goes. I would urge you to go through this list on TrendSpider and look at some things here. We talked about LNG, liquid natural gas. This is Cheniere Energy. Had a buy-in here at 141. You're going to get up to this gap at some point in time between now and the winter because they're going to start delivering more natural gas to Europe. And they just signed a contract with China, and that's why you're seeing this one. They're going to start delivering natural gas over there. Schlumberger, this one, huge move here. 48.77. This doesn't move like this. 48.77, and you're up at 53 within a week. Within a week. So your earnings are coming up July 20th. I think they announced great earnings again. Shell, look, it's just above the 200-day. Your UCO, it just is it's using the 200-day as its resistance level at 25 here. You had a buy-in here at 23. You made your 10%. So oil and energy, KOLD. We can look at KOLD. Look at this one. I mean, this one has just been a monster. 131 back in March, and you're at 156. Oil is still going fairly well. It's not doom and gloom. Rig is one that I brought up here, down here at 6. And I said, hey, this is probably going to 10 here. Your boy didn't put money on it, but, hey. But if you did, you're doing really well. 622, 633 was the buy. I can't read it, but it's 633, I think. You've still got confirmation, and this one's going well. And all this does is transport oil. They have no exposure to oil per se. All they do is transport oil. So their earnings are coming up July 31st. Jim Lebenthal likes this one. I think it's a good pick. I probably should have been in it. I'm not in it, but I like it. Let's talk about some of the winners yesterday. DKNG, DraftKings. Your boy got out of this in I think December with a pretty good loss. I should have held it because obviously it's just a monster. 25.73 was the buy-in here. We brought it up. It's moved again. I mean, it's just it defies all logic to me. This is kind of the Tesla of sports betting. They're losing $1.3 billion. They have a market cap of 12.62. They have $3.49 of cash on hand. The average price target is 29. You're trading at 28. No reason to get in other than, hey, I think it's probably on its way down. Another one, Rivian. I've said this, and I think you're going to be fine in Rivian. In pre-market, you're down 2% to 24. I think this probably 21 to 22 level. There's a gap right here, 21.77 to 22.41. I think that's a pretty good price target to come back to and maybe buy. Rivian is not, even though it's overvalued, it is not going bankrupt. They are increasing deliveries. That last quarter was killer. I am seeing more Rivian vans from Amazon here in New Jersey. It's really, really good. An opportunity that I see, and Evercore, I think, was the one that upgraded them today, but is Uber. Now, Uber just got you out with a 5% gain. Again, under 40. Under 40 buy, I think, is good. But you're trading right now at 42.33. I think if you wanted to buy this one today, even though the algorithm says no, I think you're good. Look at that MACD kind of crossing down and moving downward. Your RSI is in no man's land at 43. I do think if you get to this VWAP at about $40.81, I think anything in the upper 40s, I think you're good on this one. The danger that you have with Uber is if they come out, their next earnings are July 31st. And if they come out with a positive cash flow, then you're screwed. I mean, it's just too late to get in. The target price is 50, and we can look at it. I was talking about it yesterday. Dara Khosrowshahi, I think that's Khosrowshahi. Connie. I think that's how you sell. Sold $4 million worth of shares at 45. I think that's where you go back to. I mean, he's selling it at 45, not because it's overvalued. He's selling it because, hey, right now it's not a bad place to be. Probably need, $4 million bucks. Guy probably needs a pool in his backyard and his house in Tuscany. That's probably what it is. It's not much for that guy. So, but Uber, I do think, is an opportunity. We talked about it a lot too. Another opportunity that I really liked that's currently still running is Pinterest. And see, it's covered the gap. We talked about it covering that gap back up to 27 when it was down here at 21. We talked about it. Elliott Management's in this one. It was a good one. Earnings coming up July 31st. Later this month, you've got a lot of earnings that are coming up. But those are the ones that I wanted to look at. I wanted to point out this website, and I will put it in the newsletter, Savvy Trader, savvytrader.com. I have two portfolios. There's an equal balanced core portfolio. So if you ever wondered and you don't have a subscription to TrendSpider and you wondered what's in the core portfolio when I talk about it a lot, this is it. I just bought 100 shares of each one back a few weeks ago, and I put it in this. And, so far it's not doing horribly. Number one position is Costco because it was up at $500. And so that's the most expensive. The least is Cleveland Cliffs. I bought 100 shares of that at $16.44. It's just based on the share price. It's equal weighted. But the big one that I want to point out to you guys is the daily stock pick trading portfolio. And that's this one, because this is what I buy. This is where I buy and hold. I talk to the paid subscribers about a trading journal. This is a trading journal. This allows you to put in notes about why you bought, why you sold. And you can basically go back there and look back, a year, a month, whatever you want. This Savvy Trader AI actually generates a historical analysis for you as well. It's super, super interesting. Sign up, follow my portfolio. You'll get daily alerts. If I do buy something, I think it sends a real-time email out to you. The only other one that I actually subscribe to is Bradley Freeman. He's got a great portfolio, great strategy. I really, really like his positions. He is rather risky, I would say. It is high growth, but I like all of his notes. Fantastic, fantastic reasons as to why to get in and out. He just took a big, sold $80,000 worth. 80% gain. He sold an 80% gain in Shopify. 80% gain in Shopify. He's not doing options. He's basically just doing trades. So I think there's three portfolios, and I've got all three. I will look for others, but Savvy Trader, I really like it. And if you ever have had issues with journaling, I think it's a good one to buy. A good one to get into is to just get used to putting it in there and putting your reasons, because you don't want to make the same mistake twice. I'm going to put a couple of notes in the newsletter about some China stocks. Fisker was rallying on news of a $340 million convertible note debt. Carvana rose. I'll put some notes in the newsletter. There's also a chart that I'm going to put in the newsletter, and it's interesting. And I found this, I don't know who posted it, but every Wall Street analysts are bearish on the second half of 2023. How accurate are the analyst forecasts? And this is what's crazy. Every single time the Wall Street analysts were negative on S&P 500 second half of the year returns, the market delivered the following gains. And I'll put this chart. 1999, second half up 7%. 2019, second half up 9.8%. 2020, second half up 21%. That was the COVID year. 2021, second half they were bearish, up 10.9%. 2022, we know what happened. They were bearish. It continued to go down. But remember, 2023, we were way up. They're bearish. What's going to happen the second half if 1999, 2019, 20, and 21 are any indications? Maybe we're looking at a good one. I will post this also in the newsletter. This is Google, and this is a gap. Google closes below its 50-day SMA today for the first time in nearly 4 months. Below with 115, we have a gap to fill. So if we go back here to GOOG, and I'm going to get an interactive map, and I'm going to go back to the daily, and you're going to see that gap. A little bit different looking on mine, but that gap is between 115 and 113. You have no volume shelf whatsoever that seems to have been built up between 117 and 109. But I would argue that once that gap gets touched, it provides some sort. The VWAP is right there at 112. It provides some support level. Now, their earnings are coming up July 25th. I don't think you should wait to get into this one until it touches that gap. There is not a lot of difference between 113 and 116. If you want to buy a little bit here, and then if it continues to go down, you buy a little bit more. I guarantee you're getting up to 130 again at some point in time this year, if not next year. This is not a stock that is going to lose everything. Buy a little bit. If you want to trade it, be a little bit more careful and have your stop losses tighter. But I will tell you that I think in the August-September timeframe, you get a little bit more sketchy, a little bit more dangerous in buying into this. But if you want to buy for the long term, I think you're fine. I will post that chart. That is care of TrendSpider. One that Sherry brought up yesterday, and I think she messaged me later in the day that she bought it. A cake. This is the Cheesecake Factory. And I was on air yesterday on YouTube talking about it. I invested in Ruth Chris, and I got out of Ruth Chris with a huge gain. Ruth Chris was taken over by Darden Restaurants, so the stock doesn't exist anymore. These guys, they've been beaten down, and you see the 200 days moving negative. Their earnings are coming up July 26th. I don't eat at Cheesecake Factory. The last time I even ate at a Cheesecake Factory, I think, was probably in the 90s. The only thing I remember is I couldn't move after getting out of Cheesecake Factory. It's huge. You know, your boy's not too big. So I think I'd roll in there, probably get a salad. But it's just using the 200-day, and it's crossed the 200-day, which is bullish. The algorithm has you buying in at 34.21. You're only at 35.17. The RSI is a little bit extended at 60, but the MACD did just cross up here at 34.21. You're kind of putting in a little bit of a capitulation here before earnings. Again, we don't know what earnings are going to be like, but earnings weren't good the last time. Earnings weren't good here. So obviously the stock reacted. The volume's actually trending down. I'd be a little bit careful of this one. I don't think it's a bad play because I do think 34 right now, you're at 35.17, 34.17, 34.12 is the VWAP. So your volume weighted average price is right there. So I think you're fine. I would be concerned about the 200-day moving down negative, but here's the thing. As that 200-day moves down negative, the 50-day is actually moving positive, which forces a golden cross in that stock. What happened the last time we had a golden cross? Here. You went from 32 to 40. So I'm not saying it's going to happen, but that's a pretty good indication. I mean, here's the weekly. You're just under the 200-day. The majority of time has been spent that's COVID back there that you see that huge loss. But see, it hugs the 200-day. Just kind of, up until 2015, it was over the 200-day. 2017 kind of goes down over the 200-day. Then you just slide right there. COVID killed it, but then it came back strong. Then you kind of lost it from 2021 all the way to July 2022. Now you're just kind of in this no man's land. So cake, I like it. Just be a little bit careful. Mark from Spotify. Oh, you know what? Let's put in Mullen for Joe. Mullen is one that I think you should be probably keeping an eye on. I don't like it. I think their CEO is a carnival barker. It is not a long-term play, but absolutely 100% around 20 cents. It's been capitulating right here. It went all the way up on July 6th when we came back. It went to 32 cents. So it's kind of interesting here. I kind of like it. Look at the volume. I mean, the volume's picked up in this one. The RSI's at 46. The MACD's right on that line. Their earnings are coming up August 7th. These guys are hype rally guys. I don't know. I mean, again, they announced a buyback. It was nothing. They announced an investigation into short selling. It was nothing. It's all hype. So Joe's been doing pretty well in this one. Think about it. Yesterday, it was trading at like 19 cents, jumped up to 22. It's over a 10% gain. So if you can manage the positions correctly and kind of scalp it, I think you can make some pretty decent money on that one. Just be aware, rug pulls happen. I mean, look at that rug pull right there from $5 down to 20 cents. They're getting delisted, blah, blah, blah. Mark from Spotify, can you go over GLD at least on Mondays and or Fridays? I believe lots of everyday listeners do play gold and silver. Thanks in advance. Great news on your dog. Yeah, Penny is fine, by the way. Crackhead is going nuts. I'm not a big fan of the metals. And I'll tell you why I'm not a big fan of the metals. I think it's a flight to safety most times. Now, you look at that 2017 to 2022. This has basically been, when you print money with the U.S., this is the flight to safety that you see. And you see it here from 120 up to 176. I just think... this is the housing crisis that you see right there. And I guess we can't go back. Let's go monthly. We'll go monthly. Because you can see the 200-day is just starting there. You've got a cap here of 190. I mean, 200 seems to be where it just tops out. So at 178, am I interested? Not really. I mean, again, if you want to drill down on the 4-hour and look at this one, it's not a great one to trade because it doesn't have hyper volatility. You're in at 176, 178.36. You got a gap up here at 180. Again, I've always viewed this as a flight to safety, Mark. I've never viewed this as more of an investment. It's just, hey, if you think we're going into hyperinflation, if you think we're going back to the 1970s, and we can take this back to, let's look at a monthly, and let's see if we can get back to the 70s on this one. I don't think it's going to take us back to there's no more data. GLD might just not have existed back then. Yeah, I don't think it's existed back then. But if you look back at the hyperinflation stuff, gold rose because people fled to safety. Evan on Facebook wants me to go to GWW. But again, the metals, I think you can absolutely invest in them. I don't think they're horrible. But again, I've always viewed them as a flight to safety, not something necessarily that you want to invest in. My personal preference, and again, don't listen to a douche on the internet because I may be completely wrong in this, but my preference would be rather than me invest in metals kind of like that, I'd rather invest in a bond. I'm guaranteed a certain percentage gain. The actual asset may go up or down, but I am actually, my flight to safety would be a bond if I were absolutely worried about stuff. Evan wants me to go over gold, Granger, GWW, and I think I did this with Cintas the other day. It was a buy here at 670, and all of a sudden you're at 800. I mean, this has just been that's June 2nd. I mean, that's 1 month you've gone up. I don't even know what happened, but it's been a phenomenal move. Let's see. The PE is 24. It's a bit extended. Market cap. Let's see. And let's look at the PEs of industrial distributions. We're going to look at the top PEs. 65. Where's GWW? There they are. 7. So it's up there in not the top range, but it's close. From a PE perspective, I don't know that I'd worry about that too much because, listen, Tesla's extended and that year to date, you're up 43%. 1 year, you're up 68%. You are at all-time 52-week highs. So 797, you're trading at 798. You're at 52-week highs. 52-week low, you're 80% above it. So the average target price is 731. I'd be careful. I mean, honestly, it's one of those companies that I know nothing about. Their earnings are coming up on July 26th. Let's say it's 26th or 27th. 27th in pre-market. So I'd be a little bit careful at these extended. You can see right here, if I bring this in a little bit, we still have confirmation. So you're above that 9-day. The Bollinger Bands are kind of syncing up a little bit. That 50-day is moving. It's used the 200-day as its bounce support. So I don't think you're in danger of getting back to this 623 unless something happens. But it's clear the market loves this. I know nothing about the news, but Evan, if you're in that one, great. Sam from Facebook, would you mind going over PAGP? Let me look at PAGP. I don't even know what this is. Plains GP Holdings. Sam says, I've been playing around looking at potential breakouts on FinViz. Kudos to you, Sam. And this one kind of looks interesting. Not sure if it's got enough upside left. Let's see. PAGP, it does look like it's above its 200-day, which is pretty good. $14.18. It's trading at $15.16. Let's look at a long term. It looks like you might have missed that run. But if we look at the long term, you just got that golden cross here at 12. Now, if we go back here, it's crossed that 200-day. So this could be a move positive back to the 23 level. But let's see what they do. This is an energy. Yeah. Year to date, up 21%. Average target price, $16.27. You're trading at $15.16, so it's not horribly. Your 52-week high was $15.20, so you're right up there about 52-week highs. Raymond James upgrade to $17. Let's look at insiders. Insiders are buying at $13.25, so you're providing that support level at about $13. So if you buy here at 15, you're kind of hoping that you get back to pre-COVID levels, I think, of $18, $19. Let me see their description. I think they're oil and gas. Plain Americas owns, operates midstream energy infrastructure in the United States and Canada. Two segments, crude oil and natural gas liquids. I think both are on the rise. I think you're fine. I mean, the PE is a little bit extended, but if these guys continue, I mean, you got a 7% dividend. All looks good. I don't know that I necessarily feel comfortable buying at 52-week highs, but if you're looking at all time, I mean, and energy is starting to come back, these guys may have just pulled a little bit forward, but you're above that 200-day, your 50 days moving positive. I'd just be a little bit worried in the short term because that's a huge move up, a huge move up from 14 just, a week ago to 15, 16 in the energy space, while oil has been going, not performing well, I should say. But Sam, I like it. Carl on YouTube asked about AT&T. I told Carl that I'm not a huge fan of AT&T. My dad worked for AT&T. And the reason I'm not a huge fan, we'll start this backwards. We will start with a monthly look because AT&T, you need to understand how bad this stock has been over the life of the actual stock. Now you can see, here's the dot bomb. This is 2000s. It was up here at 41. And you took the trip back down to $16, $18, somewhere in that neighborhood. And you spent the mid 2000s in that range. And you rode it all the way up in the late 2007 to 31 before the housing crisis just crashed you. And the housing crisis brought you back down to 19. And then from 2010 until 2016, wasn't a horrible ride. You got to 32 in 2016. And then you just kind of crashed down here until 2018, where you kind of got a bump up. And you went from about 23 to 25. And now we're talking, what is this? Almost 40 years? Somewhere in that neighborhood. Now, let's go to a 4-hour chart. Well, you know what? We'll go to a weekly chart because the weekly chart still looks bad. 50 days moving down, 9 and 21 are moving down, 200's moving down. No reason to look at this one because, again, we went long-term and it's going down. Let's look at the 4-hour now. If we look at the 4-hour and we see, do we have an opportunity to actually get into this one while it's rising? In my mind, this is a trade. Absolutely 100 a trade. I don't think you'd be lucky to get back up here to 18, I think. Here's what you have to know about AT&T. It is a cost expensive business. So while you're charging consumers less for the product, because let's be honest, whose cell phone bills are going up? If your cell phone bills are going up, you know what you should do? Go over here to my link tree and click on Visible. Visible is through Verizon, but you get $20 off your first month, which makes your first month $5. Now, there ain't nobody that I know whose cell phone is going up. This is a race to the bottom as far as the revenues go. As far as the cost goes, it's going up. So your costs are going up, but your revenues are going down. That's a disaster for a business. They have a 7% dividend that is in danger. The second they get rid of that dividend, 7.27%, then they lose their entire stock price because people will be selling it. So AT&T, you could buy it as far as a trade goes. The 4-hour algorithm has you out. The RSI is at 33. Their earnings are coming up July 25th. I just don't think it's a great investment, Sam. Or I'm sorry, Carl. Trevor on Facebook. Gary, do you think it's a good time to get into CAT, medium to long term? CAT's one of the Dows. Ironically, that'll lead us into the scans. CAT got a secondary cross up here. And when I talk about cross ups, I'm talking about entries into the algorithm. So this entry at 225 right here, back on June 2nd, it got another entry. You just don't see it because it never got you out. So you're crossing this top at 251. I don't think it's a horrible time to get in long term. Now, here's what you have to know. 270 is kind of your top. That's the top. It's expensive. The time to get into this was when it got down to 200s. Your boy has been adding on this one fractional shares. I mean, we're talking not 200 because it's in my my Webull account. And I started a position. I was just dollar cost averaging it down. I'm not even close. I think I bought at like 260 something. So I might be close, but the fractional shares were just, fractional buys. But CAT, I don't think it's a bad time to get into CAT anytime. The only reason I think that you stay out of it is because it's gotten close to the 52-week high, which is 266. You're 6% off there. So if it's long-term, I think you're fine. Farm and heavy construction, you got farming is going to pick up here in the southern half of the U.S., for the summer. So you've got your expenditures, you've got your all of your infrastructure stuff that has Caterpillar stuff in it. It's heavy construction machinery. So you're going to have a buying spree on this one. You're up year to date 3%. Performance over 1 year is 38%. You shouldn't have a 1 year gain of 38% in this big of a stock, but you do. So I don't think it's a bad time to get in. I just think, if you want to buy and hold it for 10 years, I think you're fine, Trevor. But if you want to hold it for the next 2 months, I think you wait till it gets back under the 200-day, to be honest, on the daily, because it will get back under the 200-day on the daily. Make no mistake about it. That golden cross may push it to even higher highs. But if you're looking for a medium-term one, I don't know. It's not great. Let's look at some of the scans. One that I hold in the Savvy Trader portfolio is PayPal in the trading portfolio right there. I bought in at somewhere in the neighborhood of 67. You are way up today. You're up 1%. It's over 70. It's covering this gap. Is it too late to get in? Absolutely not. I bought close to, I think, 67. I missed that $60 price target. That price buy-in there was legendary. I think you're coming up to fill this gap. 70.55 is where it's at right now. You can buy it. Etsy is one that I hold in my portfolio. It's not one that I completely suggest. I use Etsy. Got a buy-in here at 85.83. I use it to buy gifts for people. I like it. So it's small business, but it was a pandemic favorite. If you go and look at it weekly of this one, you'll see right when the pandemic started to, hey, pandemic stocks suck, boom, you dropped. I didn't get rid of it. I'm going to dollar cost my average way up. It's under the 200-day. Just understand the business is expensive, and that's where they're getting killed, is the cost of it. CRM is Salesforce. Mark Benioff sold a bunch of stocks, I think a few weeks ago or something. Has another buy in here at 212. Anywhere between 200 and 210, I think that's probably where you're buying it. Here's the thing. August 23rd is their next earnings. The last earnings wasn't so great. Your 200 days still moving positive. I think you're fine on this one. Goldman Sachs, I think you're coming up on their earnings. You're under the 200-day. Earnings July 18th. I think it's aftermarket, or is it pre-market? Let's say pre-market, July 19th. Pre-market, July 19th, 317.85. It's trading below that at 317.45. If you look at Goldman Sachs, here's what you have to know. Goldman Sachs, you always want to buy a bank around book value. That's 308.15. Now, the last time we had it down here at 308, somewhere in this neighborhood, you went up to the 340 level. And I said, buy this under 300 and you'll be fine. Buy this at 316. I think you'll be okay. Goldman Sachs is a business that isn't going anywhere. We had some levered ETFs, UMDD, which is the Ultra Mid Cap 400. This one's been on a run. I mean, we were talking about it here down at 16. You're at 20. That's a huge move in that one. HIBL. I traded the HIBS because I thought we were done going up. HIBL had a cross up here at 37.63. You're at 39.55. HIBL. URTY. This is a Ultra Pro of the Russell 2000. If you know the Russell 2000, let's look at the Russell 2000 because it's going to play catch up, and it's been playing catch up for the last month. If we just do a chart here and we do it against the QQQ and we do it against SPY and we do it against DIA, I think it is. There it is. And we'll just do that. And we do it over 1 month. Look at IWM. QQQ obviously is going to kill it. SPY, killing it. IWM has some catch up to play. And look at that last, if we just look at the last 5 days, look at IWM against the other ones. It's coming back. URTY is a place to play that one. And it's levered. Ultra Pro, to 41.99. You're trading at 42.04. We had a bunch of ARK stuff. TARK, which is a 2 times levered against ARKK. That one has a secondary cross up here. It's kind of been playing around up there. It's a little bit ARKG. We had a cross up here at 34.81. 34.81. ARKF. If you don't know anything about financials, ARKF. We had a cross up here, secondary cross up. $20.86 was the first cross up. ARKF. ARKW. This is my favorite ARK fund. I found this one way back in 2016 because they were getting Bitcoin in this one, GBTC, and they were trading it as part of the ETF. So $48.82 was the original buy. Look at that. That was on May 5th. You got all the way up to $61. Fantastic return on ARKW. It's not stretched because here, if you look at this one from a weekly perspective, look at how far down that is. It hasn't even reached the 200-day. Your 50 days starting to turn positive. Your Bollinger Bands are just starting to expand. Now, if we pull this back here to its highs, you still have a ton of people holding up here at 150. The majority of people are holding here down here. But the granddaddy of all ARKs, ARKK, had a cross up as well. And this one, $44 was the buy-in. You're at $45.91. So another one that I wanted to include as far as opportunities is Win. We talked about DraftKings. Win is under the 200-day at 107.11. They have earnings coming up on August 8th. I think they're going to kill it. Now, if you look at a long term of this one has been killing it. You're above the 200-day. When's the last time you went above the 200-day? It was back in March 2021, and you just went down from there. This is a good trade. I think you may see it pop on earnings. That's the way I would play it. Rocket Mortgage. I've talked about this one. $9.33 is the buy-in. I've talked about this one at $8 back in May, at the end of May. And I said, hey, housing is still strong. Look at that. Got you out with a 6% gain. You easily got your 10%. $9.33. If you look at this one from a long-term perspective, it's just been a dead horse. It's kind of capitulating here. I think you can play this one to be an $11 stock at some point in time. We talked about CAT. Starbucks is under 100. This is one, I think it's putting in that level right there at 97, 99.15. I think you're going to come back up here and fill this gap. Their earnings are coming up on August 1st. I would look for China to be a little bit of a lag on this stock, and that's going to be the big one. BLK, BlackRock. I think Brian asked me about BlackRock yesterday. I like BlackRock. I mean, BlackRock has been, it's kind of the commercial real estate is going to kill them. But it's brought them back down to the 200-day. When's the last time you were at the 200-day? 2018, COVID. You don't get a chance to really buy this one at the 200-day historically. So I think if you want to get in, it's $701. The all-time highs are around $1,000, so you got 30% upside. I think you're still fine on that one. So to round it off, Sherry is telling me she got out of Fubo yesterday because that was her plan. But Fubo is up. It went up. I guess it went to 263, but it's down there again at 249. So if you have any questions, you can contact me on any of the socials. Go to my link tree, linktr.ee/Daily Stock Pick. You see it on your screen right now. You can get 25%. All the charts that I just showed you, they're in TrendSpider. 25% off, DSP 25. It gets you all my algorithms. Essentially, the way that it works is you sign up for TrendSpider using my link. I see you on my program. You need to be on my program in order to get all the updates. So when I change things, you'll actually get the updates. You need to be on my program. And once you get confirmed, set up, send me an email. And the email's right over here. You can send me a Facebook email. You can send me a Twitter DM, whatever you want. Just send me something that you signed up for TrendSpider and you like my welcome letter. And I send you the welcome letter. Has all the links. It's plug and play. That's the benefit of signing up through me versus signing up through TrendSpider. TrendSpider, it's a blank slate. You have to build it yourself. I give you the tools. We talked about Visible. Anything more than $25 a month, you're crazy spending that on your phone bill. Get Visible through Verizon. And third, Webull. If you don't have a brokerage, I suggest Webull. The reason I suggest Webull is their mobile app. I think it's actually better than Fidelity. I have my issues with Fidelity that I bring up with them all the time on their mobile app. Second reason is their Monday morning getting you ready for the week kind of just summary is great. And the third reason, when you sign up, you just click on this link. It gives you stocks. I got a bunch of free stocks when I signed up. I only put in $1,000. So I've got $1,000 in there today. I just bought TQQQ in there today. Yesterday. Let me see. Hold on one second. Let me see. My neighbor's texting me. 11:51. So I'm up 1% on TQQQ. Sweet. So if you have any questions, hit me up. But there you go. I will not be on tomorrow. Sign up for the newsletter. The newsletter is right here. And remember, Savvy Trader, SAVVY TRADER. It's a great tool. So if you have any questions, hit me up. I will talk to you guys later. See ya. 52 minutes. Holy crap, I went on a long time. And I even skipped a bunch. Hold on one second. I've got to reply to my neighbor. Who called me? Not gonna call me. Okay. Sorry, my neighbor in New Jersey is. I'm sorry, in Atlanta is texting me. I'm gonna move you over here to Active Trader Pro, where we can see TQQQ has actually crashed. Wow. Let's move this back. Yeah, took all those gains and just gave it up at open. Fubo. Let me see. Did Fubo really get up that high? And then it crashed, I guess. And yeah. It crashed like everything else on open. Big money came in to sell at the open. That's essentially what happened. I did not forget to put the trash cans out. The trash cans are on the side of my house because I put them out. Great, she's got a leak in her house. Fubo's coming back. Yep. Listen, I think the market, I think the bulls are in charge. I think the bears come in and sell, and the bulls come in and buy. I mean, look at Devon Energy's up 1%. I'm looking at the core portfolio. Amazon's up 1.5%. I mean, just buy Amazon. Cleveland Cliffs up 1%. Energy's coming back big. Oxy's up 1%. PXD is up 1.5%. Shopify's up 1%. That's close to 60. Buy Shopify at 60. Taiwan Semiconductor got down to 100. It's up at 101. Let's see MPW. Well, hold on. While you guys do that, you guys play amongst yourselves. I'm going to upload this episode. Select file, desktop, upload. What am I going to name this? Let me see. I gotta look at my notes. Here, I'm going to exit out of here. Quit GarageBand. Save. Update. I need to look at MPW. I like that play of yours, Sherry. Oh, I got another interaction, it looks like. Man, people love to message me on Spotify. I can't message you back. I can't credit you. I can't do any of that. Get rid of that. We don't need that. And we're going to put in these notes. Let's see. What if I put in, I just copy all this. I guess it doesn't put in the pictures. Boom, boom. Okay, now, no. Next. Next, insert ad break. I'm going to insert one. Okay. I should mess people up and just put in an ad break in the middle of the episode. B Malik. Always positive, B Malik. Oh, God. You're kidding. Fuck him. God damn it, Jim Cramer. Let me move to the 5-minute chart. Did it just take a plunge? There's the Jim Cramer effect. Fucking Jim Cramer. There's the effect. Let me see. Am I up for the day? No. I am down 0.08. It's all Apple probably. Let's see. All positions. Yeah, I'm down a bunch on Apple. I'm up on Amazon. Wow, Microsoft I'm down a lot on. That's down almost 1%. That's shocking. Palantir, even though I didn't get in as early as you guys on Palantir, I'm still up 15%. That's shocking to me. Just got the news on Weeble. I love Weeble. Let's see, MPW. I got to do my graphic now. God, look at MPW. It's been a monster. Look at the 10-day. Look at that. Off of $9 to $9.50. God, that's a nice one. Okay, let's see. I gotta use iMovie. And I've got to put in my there's iMovie. Okay, and I'm going to export file faster. Next, we're going to call this 7 pod. Okay, now I got to do my thumbnail. I love that Webull is all in on the inverse. I should do my title as Paul, you're a dick on YouTube. Okay. Share. Which one did you get, Brandon? I'm a drone guy, you know. Hopefully it's a DJI one. Tell me which one you got. I'll mock you. As a DJI snob, I'll mock you. Let me see where iMovie is on this one. It's still got 10 minutes. So I got 10 minutes left. I wish I could do the actual text of the damn YouTube video before I had the video ready to go. I should do some live Amazon shopping. Let me see though. I want to see what is TQQQ losing it today. It did kind of lose it. Still doesn't have confirmation. I bet it is. Let me look it up. Hold on. I'm gonna look that one up. I'm gonna move you back to Safari, and we're gonna go big head. Let's see. Ruco F1 L11 Mini. Ruco, let's say. Yeah, it's trash. It's probably not. Let me see. See, the thing with drones, it's not the hardware. You're never going to get 60 minutes of flight time. It's not the hardware that differentiates the drones. It's the software. And so the issue is always, let me see where their reviews are. Wow, they have 4.3 ratings. Yeah, you'll get some decent photography out of it. I think you'll be able to do some decent photography. Oh, here's the best drone you want. It's more money though, Brand. I mean, that's it. The Mini 3 is the best drone. And you don't need the Pro, but look at the price. That's the difference is. You're not getting a DJI drone for less than like $700. So you don't want that. Yeah, I think the drone will be good for the kids. I think that other one will be good for the kids. But if you want a nice drone, I don't have this one. I have the Mini 2. I have the Mini 2 and I have the Air, the DJI Mavic Air. So the Mini 2 at $489 isn't a bad. It's not bad at all. You know, I crashed mine more than I can tell you. Oh, there's a Prime Day deal. Oh, that comes with the controller. That's actually a pretty good deal there on the Mini 3. It's addicting. I tell you what, it's addicting. Flying a drone is just addicting. I love it. Racing is FPV, and if you want an FPV drone, I don't know if anybody else finds this interesting, but I can geek out about this one too. The DJI is not a bad one. It's actually a really good one for pilots like me who aren't really good at FPV. That's a good one. You got the kits that you can do FPV on. You can attach. There's a bunch of them that you can attach a yeah, I've seen the leagues, and those guys are crazy. That's why I like this DJI one. It's kind of a mix between the two kind of drones where you can do FPV, but it's also kind of like a hover one. Those real FPV drones, they ain't gonna hover. So, but I like it. Okay, let's see. Prime Day deals. I can get a Fire Stick. Echo device. I mean, it always promotes all the damn Echo devices and stuff. I think you have to look at Lightning deals, don't you? I don't even know how to shop this stuff. By the way, I was looking for golf pants last night. And fucking golf pant models were shirtless. Why are you wearing golf pants shirtless? Total thirst trap for all the wives buying golf pants for their husbands. I'm looking. I don't need anything. That's the biggest issue. So I don't really need anything. Oh, that's kind of like I could probably use some new lawn tools. Oh, that's not a bad deal. With a battery. With a battery. That's a really good deal with dethatcher. Ooh. Yeah, exactly. Shirtless. Ooh, that's a good deal. 19-inch brushless 2-in-1 mower. Does it use the 40-volt battery? Yeah. Comes with one battery though. And each new battery's $178. That's where they get you. It's not a bad deal, though. I mean, 187 bucks. Not going to pay that for a backpack sprayer. But I got to tell you, this one right here, 123 for the blower and the trimmer. I just got to look at the trimmer. Dual outlet line, auto feed head. It's not a bad thing. I don't have a power. I don't have solar at my house. I've looked at the potential. I don't have a power wall. I do have all. I have no oil in my house. I will say that. I don't have gas-powered equipment, anything of that sort. Oof. TQQQ is taking a leg down. NASDAQ is taking a leg down. Tesla's getting hit. Mara's at 17. Look, TQQ still doesn't have any. Yeah, boy, and natural gas energy is as a whole, Joe, is just, it's really going up. So, Brandon, I don't use a lot of electricity, and that's where solar would not be good for me. And specifically in Atlanta, which is not great for sunshine. So when I looked at it, it was, I think 5 years ago, maybe 5 or 6 years ago, I was going to actually be out of pocket about $8,000 to $10,000. The actual system was going to cost between $20,000 and $25,000, but I was going to get the majority back from the government. And so that price would take me 8.5 to 10 years to actually pay back. So it wasn't going to be horrible, but I talked to one of my friends, and because I don't use that much electricity, and because at the time Georgia Power didn't allow you to resell your current electricity onto the grid, the issue was that it was going to take me a lot longer to pay back. I wanted to do it to charge my car, blah, 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 but it just didn't make sense for me. And I wasn't sure if I was going to move and then put all that money in. The guy at Solar tried to tell me that, the sales guy, well, it increases the value of your house. And then my mom said, any woman who sees solar panels on the house is not going to buy a house. And you sell houses to women. So I decided against it. Oh. My active trader pro just crashed. I might have to pull it back up. I have a buddy who actually owns a wind farm. He had some land that was deeded to him through an inheritance in Texas. And it's the middle of nowhere, Texas. So he had a wind turbine company contact him. Yeah, see, Sherry? But he had a wind turbine company contact him. And they pay him, each wind turbine, they pay him $1,500 a month rent for land that wasn't getting used because it doesn't have housing on it. It's just basically barren land out in the middle of nowhere. He gets paid $1,500 a month per wind turbine. And he had enough land that there were 10 wind turbines put on the land, and the land wasn't expensive at all. And I almost went to buy land in Texas. It was rather cheap. I think I was going to spend something like $100,000 or something. But I was going to be able to make something like $10,000, $20,000, $10,000 to $15,000 a month with the wind turbines. The guy signed a 10-year agreement, so he had 10-year kind of buy-in on that. The only issue really was if they went out of business and they declared bankruptcy. Then you've got expensive equipment on your land that you'd have to pay to get off, or pay to upkeep that equipment and sell the electricity back to the utilities yourself. But because Texas is its own utility, and at that time, this was, 5-6 years ago, it was a while ago, but at that time they were desperate to get more electricity into Texas because Texas has its own grid. And so this company was basically putting up wind turbines, willing to pay whatever they needed to pay to get them on your property. So it was kind of interesting. Let's go there. Look at that open. God. Let's go back to today. This is Apple on the open. Whew. Yeah, the investment was going to be great. I actually wish I would have done it now. He's still getting paid. So he's still got quite a little investment going. Okay, I'm going to put that up. We're going to select file. Put that up there. Oh, AMD under 110 again. 711 pod. And I'm going to go back over here. Boom, 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 boom. I think everything's getting beaten down today. Honestly, I may buy more today. I think CPI is going to be good tomorrow. And I think you get a surprise. And if you get a surprise, you're going to see the market bounce. That's why I bought TQQQ. I thought under 40 was going to be great, but it looks like it's going down to under 38. Nah, it's coming back. Not quite, but it's kind of bottoming out there at 39.50. Upload the thumbnail. Uploading playlist. We're going to put that there. No, it's not made for kids. Publish. All your stocks are green? That's pretty freaking good. That's amazing, Sherry. I don't think all my stocks are green. No, Apple's down. Boeing's down. Costco's down. Goldman Sachs down. Coke is down. Meta's down. Merck. Don't own Merck, though. Microsoft is down. Netflix is down. Wow. Netflix down big. Netflix is down 2%. It's at 432. I bought that yesterday, 439. I may add more because I didn't buy it the whole bunch. May buy more. I'm telling you, Netflix on earnings, that MACD is down. I'll move you back. Yeah. Cake. I'd be careful of cake around. I think if you hold that 200-day today, which you most likely will, it's up 2%. I think if you hold that one over the 200-day, like I said, I'd be crazy careful going into earnings because earnings doesn't look like it's been good to the stock. So essentially, Brandon, I went over in the podcast, but they're going to take the top 7 stocks, which is, let me see, it'll be in the newsletter. Apple, Microsoft, Google, Amazon, Tesla, NVIDIA, and Meta. The top 7 are 55% of the weight of the NASDAQ 100 right now. So anything weighted, that will go down to 50% from 55. Don't ask me how they're doing it. You've got to kind of reduce the, I don't know how they're doing it, but I'll figure it out at some point, I'm sure. It's going to put pressure on those top 7. And so if you want to buy, I think you could. Carl, I looked at AT&T. I put it in the podcast. It wasn't good. I looked at it for you. It's just not a... At some point in time, that 7% dividend is going to get dinged down to 2%. And that's where the stock will just basically die. Here, we'll look at a quarterly. You know what? Rather than a quarterly, let's look at a monthly. So you go all the way back. That is not a history of a stock that you want to buy into, Carl. That's my take on it, is just you don't want to do it. Now, if you wanted to play it short, I kind of looked at it on the 4-hour algorithm. Now, the 4-hour algorithm over 2 years, it loses you 25%. If you just bought and held over 2 years, you lose 28%. So it doesn't do you much good. Wow, look at Roblox. Roblox is up 4%. Yeah, you're getting some bounce. But I think you can trade it. I just wouldn't own it, Carl. You're getting sucked into a dividend, a 7% dividend that most likely isn't necessarily going to pay off. Your price target is 20. You're trading at 15. But those price targets are going to come down. I just don't see it. Yeah, Motley Fool article. AT&T or Deere. This guy looks at them. He published a video. we won't watch the video. But if you want to watch the video here, I'd take Deere over AT&T. I don't know what he does, but I'd take Deere over AT&T. Again, I think you're going to lose your 7% in just the asset value of AT&T. Versus Deere, I think you have some upside. This is a company with a 1.23% dividend. It's only down 3%. Over 1 year, you're up 35%. This one's a little bit stretched. Price target is 441. You're 7% below your 448 52-week high. I just, again, I'd say these guys are, you're selling at 416. He's selling his option to exercises. $22 million the CEO just sold. 22 million bucks. At 416. And you're at 413. So, okay. I am out of here. I'm going to do the newsletter. I will talk to you guys Thursday. Have fun. Let's all pray for TQQQ to turn around. I think there's some good buys out there in the market. Again, Shopify is up. Roblox is up. I mean, shit, if you bought Roblox under 40, you're almost at your 10%. I don't think it, yeah, here it got to under 40 on June 30th. I will see you guys later. So